is actually going to pull back, because it is going to be a false breakout, but it's going to be the one that leads to the actual breakout. Because in a bull market, right, things like this, a typical pattern you would see of consolidation and then this, right? Typically people think distribution, that's bearish. In a bear market, yes. In a bull market, no. It's actually generating liquidity because it induces people to go short and then we go higher. You will see this, right? The false breakout into a trap. You will see that far more often in a bull market than you will see the previous one I mentioned, like this. Okay? This does not happen in bull markets to anywhere near the amount of times you would need it to be profitable. So does it mean that sometimes there is distribution? Of course there is. But far, far, far more often you're going to see stuff like this, right? False breakout comes back inside. Another false breakout comes back inside. Looks like total shit, and then it fucking smashes. Because that is how the market works. That's how the market fucks people up. I'll show you, like, this has been very common in 2023, which I'll show using some of the AI coins, like this here, like AGIX, okay? If you look over here, how bad did this look? Moves up, sets a high. False breakout number 1, here. False breakout number 2, here. People will be shorting here, and then away it goes. Boom, breakout, back inside, and off it goes to wherever it's going. Okay? And this one actually, this highlights the principles I'm talking about pretty well as well, which so I'll come back to this at the end of the lesson, which is actually good timing for this. So I just need a 50. I don't need anything else. Perfect. All right. So your false breakouts, false breakout. It's trend continuation. You want to see a strong breakout, first of all. So you want to know you're in a trend. You don't want to be trying to guess this, because if you do this method after it's had a significant downtrend, let's say it's been trending down for 4 or 5 months and price is down 70%, and you think it's forming a bottom, and then it goes and does these false breakout, false breaks, it's going to be a lot less reliable because the market is not bullish yet. The primary trend, okay, the most recent trend we were in was down, so it's not going to work as much. You must make sure the primary trend is up. So that means go back and look at what's been happening for the past few weeks, not just at your altcoin, but at the whole market. Is it going up? If yes, if there's impulsive breakouts, this is when you want to look for it. So I say one day say 1 day or higher time frame for this, right? If you start trying to get into a 4-hour breakout or a 6-hour breakout or an 8-hour breakout, you're going to get more trades, yes, you're going to get more setups, but they're going to be of lower quality. Because the reason you're going for 4-hour, 6-hour, 8-hour is because you want more setups. Because you think that you're going to make more money by trading more often. It's not really the way the markets work. Okay? So, if you want to do the 4-hour breakout, enter on a retest, I've already shown that in some of the swing trading lessons, where you can use the EMA bands for a 4-hour breakout, 1-hour bands. 1-hour breakout, 15-minute bands. This is to catch big moves. Ideally a second leg or a third leg of a big primary trend. So you look at the strong breakout, that's what you want to see first, okay? You need to see a strong breakout. You then want to see a box formation. So I'm going to talk a little bit about the box method that Professor Ayush covers in his stocks campus. If you want to know everything there is to know about the box, go and look at Professor Ayush's campus. It's his method. It's, he showed me it. So I'm certainly not claiming any credit for it. But it's a very simple, which is why I like it, an effective method. You then wait for a false breakout. And then you want to buy when there is unusual strength. I'm going to talk about what unusual strength is and why it's not just about buying after every false breakout, because some false breakouts are in fact real, meaning price is going to go lower. So let's break it down. I'm going to show it on a couple of charts here. First one being injective, and we don't need the volume bars on. And what I'll do first of all is I'll hide all this and I'll just watch it forming from over here. And I'll show you what I mean. So first of all, what we said, strong breakout on the daily. Yeah, primary trend must be strong. So injective was trending up strongly on actually a weekly as well. So if you can get it like this, it's even better, where it's having multiple strong weekly candles. Okay, and certainly strong daily moves, but the main one we're looking at is over here. As we watch this move forward, we've had a strong move up on the weekly, and now price is going into a period of consolidation. The whole basis of this is consolidation, right? You don't want to do this as it's still trending up. You need to find coins that are going sideways, that are correcting, because it has to form a box, and it can't form a box on any decent intermediate time frame unless it is actually going sideways on the daily or even on the weekly. This is important because psychologically this move here gets missed by all retail. Okay, it gets missed by the dumb money. It gets missed by many traders. It gets missed by good traders as well. But it's an important sign that the trend is up. So what people will want to do now, because now all the news is going to be talking about injective, everyone's going to be talking about how this is the next big thing, the big bullish narrative, injective this, injective that. Everybody's going to want to catch the next big trend on injective, because what they do is they look at it and think, wow, it went from 7 to 15. This thing went 2x in 3 weeks. I would sure love to double my money in 3 weeks. And so that's their logic. And they think, well, last time, if I just bought here at the breakout, it only went up. Look, it never pulled back. And so they think the same thing's going to happen again. And that is where we are primed for having false breakouts. You've seen on other swing trading lessons that these breakouts, these big breakouts, come once. The breakouts that don't come back to the gaps, they come once in a trend which is at the start of the trend. That is because most people are not on board. They are sidelined. By now, as you can see from the nature of price action, the trend is getting much more crowded. It doesn't mean it can't go up, because if the market's going up, if the primary trend is still upwards, it will still make its way there. It just has to shake more people out along the way. So you've now seen a strong trend up, and you're now seeing price not going up anymore. We had a daily sell-off, it bounced up, so now it's consolidating. This is where you want to start seeing your box form. You can do this on whatever time frame you want. I always suggest starting with the 1 hour, okay? But when you see this, a little tip, if you see price deviating wildly from the 1 hour after a daily breakout, meaning large dump down below it, right? Then it reclaims, it goes well above it, goes way below it again, and the 1 hour 50 EMA, which is what I'm using, the 50 EMA, if it's still oscillating quite a bit, you can see it here in the wave format, it's quite wide, it's quite volatile, that's your sign that you should look at a higher time frame. And I'll explain, and you'll understand what this means when I look at the next example with Link. But just look at this, okay? A clean box will not form on this time frame. But on the next time frame up, 4 hour, it will. You notice how the line, the moving average line, is much more smooth, a lot less volatility, and price will pack around it more tightly. That's what you want to see. So I typically look at the 4 hour and the 1 hour. You could look at the 2 hour and the 6 hour. You could do whatever you want. Find out whatever works for you. And so you want to allow a trend to form, or a consolidation to form, I should say. And what you're looking at is the breakout. So I'll take this off.